A coordinated economic attack that unfolded not over months, not over weeks, but in a matter of hours. Hours that froze three of the world's largest stock exchanges. Hours that sent the ruble into a controlled spiral while simultaneously weaponizing its volatility. Hours that triggered emergency sessions in Washington, Brussels, and London before most Americans had finished their morning coffee. What Moscow did today crossed a line that the G7, the European Central Bank, and the United States Treasury had hoped would hold, and when that line broke, Kyiv did not hesitate. They responded with speed, precision, and a level of financial sophistication that caught even their allies off guard. Tonight we break down exactly what happened, why it matters, and what comes next in what analysts are already calling the most significant escalation in economic warfare since the Second World War. For several months now there had been signals, not official communiques, not formal diplomatic warnings, just signals that Moscow was preparing something unprecedented in the financial domain. Russia has been aggressive, yes, but they have been calculatedly aggressive in their economic maneuvering. Their moves have followed a certain predictability, a rhythm, almost a choreography that Western analysts had learned to read: sanctions evasion through shell companies, energy price manipulation timed to European heating seasons, currency interventions designed to stabilize the ruble just enough to prevent domestic panic. But what set off alarm bells in Washington and Frankfurt this month was that the choreography went silent. Intelligence analysts who monitor Russian central bank activity know the indicators: the unusual movement of gold reserves between Moscow and allied nations, the sudden liquidation of European bond holdings through third-party intermediaries, the repositioning of sovereign wealth fund assets into cryptocurrency and commodity futures, the sudden silence from Russian financial propaganda channels. All of that went quiet, and whenever Moscow goes quiet, it means something is about to get very, very loud. Treasury officials speaking on background told journalists last week that they were seeing pre-positioning activity consistent with what one analyst described as economic mobilization, the kind of preparation you don't undertake unless you're planning to absorb significant blowback, the kind of preparation that suggests you're about to do something that will invite retaliation, the kind of preparation that made everyone watching very, very nervous. Early Tuesday morning, swift monitoring systems detected what they described as a coordinated manipulation of interbank messaging protocols, including transaction rerouting patterns that had not been activated in over 18 months. These are the kinds of financial instruments that Russia only deploys when they are signaling something very specific: escalation, desperation, or strategic pivot. Western analysts didn't know which category this fell into, or whether it fell into all three at once. But what they did know was that Moscow was fundamentally changing its economic posture, and when a nuclear-armed state with the world's 11th largest economy shifts its financial strategy without explanation, even by the smallest measure, every central bank on earth pays attention. What happened next unfolded with terrifying speed. At 4:47 a.m. Eastern Time, trading algorithms on the Moscow exchange began executing sell orders at volumes that exceeded normal daily activity by a factor of 30. But these weren't panic sells, these were coordinated sells designed to trigger circuit breakers on exchanges in Frankfurt, London, and New York that hold Russian-adjacent assets. By 5:15 a.m. the Frankfurt Stock Exchange had halted trading in 17 major ETFs. By 5:32 a.m. the London Stock Exchange followed. By 6:01 a.m. the New York Stock Exchange activated emergency protocols for the first time since the 2020 pandemic crash. Russia had effectively weaponized market interconnection itself. The warning issued by the United States Treasury tonight was not normal. It was not routine. It was not symbolic. It was urgent. Official after official, briefing after briefing, described Moscow's move as unprecedented, coordinated, and perhaps most importantly, intentionally designed to test whether the West would fragment under financial pressure. This was not a market fluctuation. This was not speculation gone wrong. This was economic warfare, executed with military precision. But coercion only works if the target hesitates. Kyiv did not. In fact, Ukraine's response today was among the most sophisticated and devastating financial countermeasures we've seen in modern economic history. Here's what we know. Within 90 minutes of the first circuit breaker activating, Ukraine's Financial Intelligence Directorate initiated what sources are calling Operation Clearwater. These weren't standard cyber responses, these weren't sanctions recommendations, these were direct financial countermeasures, digital instruments that Ukraine has been developing quietly with Western assistance since 2022. Systems that Kiev only deploys when they are preparing to fundamentally disrupt an adversary's economic infrastructure. And today they deployed them all. Tonight, multiple intelligence sources confirmed that Ukraine launched coordinated financial operations against Russian banking infrastructure, including the Central Bank of Russia's secondary processing systems that had recently been relocated to supposedly secure facilities for what analysts believe was exactly this kind of contingency. Ukraine struck before Moscow could activate fallback protocols. They hit SPFS, Russia's alternative to SWIFT, disabling 47% of domestic interbank messaging for over 4 hours. They hit MIR, Russia's domestic payment system, causing widespread transaction failures across 14 regions. They hit secondary energy payment processing nodes that were likely preparing to reroute European gas payments through Chinese intermediaries. In other words, Ukraine targeted the nervous system of Russia's financial infrastructure, the connective tissue that would have made Moscow's economic attack sustainable. This is what made the Treasury's warning so urgent. Russia's move wasn't just symbolic, it was actionable. It represented the kind of coordinated economic aggression that could destabilize global markets if left unchecked for even 72 hours. And Ukraine, understanding that fully, responded with overwhelming force. Not recklessly, not impulsively, but strategically. They didn't attack Russian civilian banking randomly. They didn't target systems that would create humanitarian crises. They hit military payment processing. They hit oligarch asset transfer mechanisms. They hit the financial arteries that fund Russia's war machine while leaving basic civilian infrastructure largely intact. The precision was remarkable, the speed was unprecedented, and the message was unmistakable. And here's where the story becomes even more alarming. Western intelligence officials now believe that Moscow's latest move was designed to test the cohesion of the Western financial alliance. After months of political transition and economic strain, Russia wanted to see whether the G7 would fracture under pressure. They wanted to see whether European nations facing their own economic challenges would prioritize short-term stability over long-term solidarity. They wanted to see whether Washington, distracted by domestic politics, would respond with words or with action. But instead, the opposite happened. Ukraine didn't wait for Western consensus. They launched a counterstrike that was so rapid, so comprehensive, that even Moscow's contingency planners were caught off guard. You don't get the Kremlin's attention easily, but today Kyiv did. Financial warfare specialists speaking with European media under anonymity described Russia's initial move as pressure testing, a way to identify weaknesses in Western financial coordination before a larger offensive. But Ukraine proved today that they remain both capable and willing to respond asymmetrically. Their countermeasures were not only devastating, they were calibrated so precisely that Russian military payroll systems experienced disruptions while civilian pension payments remained largely unaffected. That distinction matters because it shows that Kyiv has developed targeting capabilities that exceed what most analysts believed possible for a nation under active invasion. It shows that Ukraine is not simply a victim absorbing economic blows. They are an active participant in financial warfare, capable of striking back with surgical precision. As reports continued coming in throughout the afternoon, we learned more about the scale of Ukraine's response. Ukrainian cyber units carried out coordinated attacks on Russian banking servers, forcing emergency shutdowns at 3 of Russia's 5 largest private banks. Financial intelligence operatives targeted cryptocurrency wallets that had been flagged as sanctions evasion vehicles in the last 90 days. Allied nations operating in coordination with Kyiv reportedly froze over $4 billion in Russian assets that were in transit through secondary financial centers used by Moscow to circumvent existing sanctions. This wasn't just retaliation, this wasn't just defense, this was financial siege warfare. This was economic decapitation, targeting Russia's ability to sustain military operations. And sustaining military operations is the one thing Moscow has struggled to guarantee since the invasion began. For every territorial advance they have made, Ukraine has countered with something that raises the cost of occupation. For every sanction Russia has evaded, Kiev has found new pressure points, and today Ukraine demonstrated that they can hurt Russia financially in ways that Moscow genuinely did not anticipate. Remember, Moscow thought the West would lose interest. They thought sanctions fatigue would fracture European unity. They thought Ukraine would eventually be forced to negotiate from weakness. They thought economic pressure could achieve what military force had failed to accomplish. But tonight the exact opposite is happening. Western financial institutions are coordinating with unprecedented speed. Ukraine is demonstrating offensive capabilities that rival those of major powers, and Russia's economic nuclear option detonated not on its intended targets, but on its own financial infrastructure. The Kremlin bet everything on Western hesitation. Tonight that bet is looking catastrophically miscalculated. What makes this moment so dangerous and so revealing is that Moscow's latest move happened at a time when Vladimir Putin is under extraordinary internal pressure. Military hardliners want escalation, viewing anything less as weakness. Oligarchs want stability, watching their remaining Western assets evaporate daily. Security services want scapegoats, someone to blame for a war that was supposed to last 3 weeks. The Russian public wants normalcy, increasingly exhausted by a conflict with no visible end. Putin is balancing these demands while managing an economy that has been fundamentally restructured around wartime production. And when leaders in that position make sudden dramatic moves, they're not doing it from strength. They're doing it from pressure. They're doing it from vulnerability. They're doing it because the alternatives, admitting failure, accepting stalemate, negotiating from weakness, are domestically unacceptable. Today's economic attack wasn't a sign of Russian confidence. It was a sign of Russian desperation. The G7's emergency statement, now circulating through diplomatic channels worldwide, was designed to signal that the Western alliance is not willing to allow this escalation to succeed. Treasury officials said plainly that Russia's coordinated market manipulation was inconsistent with the behavior expected of any nation integrated into the global financial system. That is diplomatic language for, "You just declared economic war and we noticed." You don't usually hear that tone from the G7 unless something genuinely serious is at stake. The European Central Bank has convened emergency sessions. The Federal Reserve has activated contingency communication protocols with allied central banks. And NATO's Economic Warfare Division, yes, that exists, has reportedly been placed on heightened alert status for the first time since 2022. Meanwhile, Ukraine's President Zelensky addressed his nation in a calm, measured speech tonight. He said they attacked our economy. They attacked the economy of our partners. They thought we would beg for mercy. He said instead we reminded them that Ukraine does not only defend, Ukraine can strike, and he said every ruble they stole, every market they disrupted, every transaction they weaponized, we answered, and we will continue to answer. These are not rhetorical flourishes. These are statements from a nation that understands just how high the stakes have become. And tonight those statements are backed by action that the entire financial world witnessed. Here's what makes the situation even more concerning. Russia's latest move wasn't isolated. Along with the coordinated market manipulation, Belarus also activated economic pressure mechanisms, restricting transit of Western goods through its territory. Iranian financial institutions suddenly increased transaction volumes with Russian counterparts by over 300%. Chinese state media began amplifying narratives about Western financial colonialism within hours of the attack. All of this happened within the same 24-hour period. When Moscow moves multiple pieces at once, it means something larger is underway. This wasn't improvisation, this was coordination, and that coordination suggests planning that extends well beyond the Kremlin's walls. Intelligence analysts are now considering several possibilities. One is that Russia is preparing for a major military offensive and wanted to destabilize Western financial support for Ukraine beforehand. Another is that Moscow is attempting to force negotiations by demonstrating that economic warfare can hurt the West as much as sanctions hurt Russia. A third possibility, the one worrying officials the most, is that Russia is attempting to fundamentally reshape the global financial order by proving that the current system can be weaponized by anyone willing to accept the costs. But today Ukraine took that card off the table. They didn't wait for UN resolutions, they didn't wait for Allied consensus, they didn't wait for Moscow to consolidate gains. They struck back immediately, devastatingly, and with unmistakable intent. What we're watching now is a test of resolve. Moscow wants to see whether economic pain can fracture Western unity. Kiev wants to show that aggression carries costs that exceed any possible benefits. Washington wants to prevent this conflict from destabilizing the entire global economy. And Beijing wants to observe how the West responds to coordinated pressure from multiple directions. Everyone is watching, everyone is calculating. And everyone understands that what happens in the next 72 hours may define the economic order for decades to come. Tonight we've heard from intelligence sources who are now monitoring Russian financial recovery efforts. They say Moscow's backup systems are struggling to restore full functionality. They say internal Kremlin communications indicate genuine surprise at the speed and severity of Ukraine's response. And they say Russia's decision to launch this economic attack is likely part of a broader strategy intended to test Western limits before potential negotiations. But Ukraine is not backing down. In fact, Ukraine is escalating proportionally. Their response today, swift, precise, and devastating, sent a message to Moscow that economic warfare is not a one-way street. And it sent a message to the West that Ukraine can be a partner in financial defense, not just a recipient of aid. As the week goes on, we expect more details to emerge about what exactly Moscow hoped to achieve with today's unprecedented attack. But what we do know is that Ukraine's response was timely. It limited the damage to Western markets. It demonstrated capabilities that will force Russia to recalculate future operations. And it proved that the global financial system has defenders who are willing to act, not just react. What happens next will depend on what Moscow does in the next 72 hours. If they escalate further, this moment will be remembered as the beginning of a new kind of war, one fought in data centers and trading floors as much as on battlefields. If they pause to reassess, Ukraine and its allies have already shown they are prepared for whatever comes. They have shown they are ready to respond. They have shown that economic aggression will not go unanswered. And tonight, for the first time in months, Moscow appears to be genuinely uncertain. The Kremlin is quiet, too quiet, and when Russia is quiet after a failed gambit, it means they are recalculating. It means they are choosing their next move carefully. Because tonight, Moscow learned something they should have learned long ago. Ukraine does not break. The West does not fragment on command. And economic weapons, once deployed, can be turned against those who fire them. This story is far from over. But tonight one thing is clear: Russia's economic nuke detonated on its own launch pad. Ukraine's financial kill switch worked exactly as designed. And the world just witnessed what happens when economic warfare meets a nation that refuses to be a victim. And we will be here watching every detail as the next phase unfolds.